Hey guys, it's Czar here. Hope all is well. Hope you're having an amazing day. It's December the 17th, but this video will be evergreen. In other words, it means that the principles will last forever. We're looking at a chart of the VIX, and this is implied volatility in the S&P 500, but I find that it's a suitable proxy for the broad market overall. And this video really is a veiled kind of warning, if you will, a subtle warning about a change that I'm seeing happening that I've seen happen many times in my long career. As you know, this is my fourth decade of trading, been trading actively for 35 years, and I've seen this happen many times. Now, the VIX hasn't been around forever, but the principles apply because I've seen it in other formats over those many years. Now, looking at the VIX, implied volatility, and what you will see is that VIX or volatility has plunged 43% in the last, call it 6 to 8 weeks. Since the middle of October, there's 43% drop from this peak right here, from this peak to trough. This is mid-October. We're now mid-December. It's up a little bit now from that little trough right there, but you get the idea. Now, what does that mean? I want you to take a look over time, and what I've found in my experience is that day trading and scalping is much easier for the vast majority of people when VIX is over 20. This is 20 down here, this red line that you see here. When VIX is above 20, like it has been all through this time here, there have been a couple of drops below, and recently we just dropped below as well. Even in the beginning of December, this is December the 2nd dropping below, right? This is a daily chart, by the way. When VIX drops below 20, it becomes very difficult for most day traders and scalpers to make money. But I want to remind you of something, that even when times are great and when times are perfect, the vast majority, I would venture to guess, nearly 100% of day traders and scalpers lose over time. Over a 1 to 3 year period, in my experience, and there's no real firm data to back this up, but 95 to nearly 100% of day traders lose money. It's an incredibly difficult thing to do for many reasons that we've talked about in my mental game playlist and so on. It has a lot to do with human nature, but also the actual logistics of getting in and out with spreads and slippage and commissions and so on and so forth. That's not what this video is about. What I'm suggesting to you is now that as volatility has decreased, despite the fact that we're experiencing massive drops in the NASDAQ and the Dow, volatility itself, right, the movements up and down are decreasing. And that can be a problem for day traders and scalpers. I want to take you back here to February of 2020. This is the COVID spike in volatility, that massive sell-off we experienced, 1,000-point days on the Dow, if you remember, selling off, right? This is volatility. This is not the stock market you're looking at. This is a daily chart of the VIX. You see that massive spike and then a pullback, but then all through 2020, the VIX remained above the 20 level. See that 20 there? But during 2020, this is the times of Wall Street bets, of Robinhood, of when everybody and their brother and their sister and the cousin were opening up accounts and became professional day traders. And all you had to do was buy the dip, and almost everything that you bought on that V bottom that we experienced, that massive rally, thanks to things like the Fed and money printing and CERB payments and on and on and on, right? Almost everybody could make money. Well, I'm here to tell you, and I can tell you this because I know a lot of traders. Virtually all of the traders that I know that came into the market during this period in 2020 have now lost everything and or given back most or all of the profits during that time, because they were leveraging huge with margin and, of course, with the options market. But that's not what this video is about. What I'm suggesting to you is this, that during periods like this, it's easier, if not easy, to day trade and to scalp if you have a reasonable edge or a model or a system. It becomes more difficult during this period here. This was 2021, all of 2021 right here, moving into 2022, and again it became easier. And you see this with the gurus and the furus and the streamers and so on and so forth. They're struggling again now. And you'll see something very similar in the Forex market, by the way, with the EVZ, volatility in the Forex market also plunging as we speak into single digits on the EVZ or the EVZ, depending on how you say that. I'll say Z for my UK and Canadian followers, but you get the idea. Okay, guys, so what am I suggesting? Be careful out there. Be careful day trading. Be careful scalping right now. Make sure that this VIX is at least trading above the 20 as a guideline. I mean, you can do whatever you want. This is the way that I do it, and it saved me a lot of money, and it's kept me away from a lot of damage and catastrophic trading. The other thing I would suggest is to consider moving out on your time frames. I've recently, my followers know this, I've recently moved from the 10-minute and 1-minute charts to the 1 hour, 30-minute, and the 4-hour charts in my day trading and scalping. And it means I'm taking a lot fewer trades because the setups are not happening like they were even just a few weeks ago. And avoiding weak setups is critical to your success as a day trader and a scalper. My other suggestion is to consider moving to swing trading during these periods and to start holding trades overnight, even for days or weeks, depending on what the conditions allow for based on your system, based on your trading model, and then based on your trading methodology. Thanks for your time, guys. Be careful out there. If you have any questions, you know how to get a hold of me. Take care now. Bye-bye.